Welcome to the latest edition of LUMA's Market Report. I'm Connor McKenna, partner at LUMA. Q3 24 was a pretty exciting quarter from a news perspective. You had Google announce that they were not going to deprecate cookies, but instead push it onto consumers. Google's search business was declared a monopoly, and Google's antitrust trial against the ad tech business all happened within this quarter. Additionally, the Fed decided to cut the Fed funds rate by a full 50 basis points late in the quarter. Now, while these are all very important news stories, most of the impact of these is not happening until the future. And so for this video, we're really going to focus on is a few trends we've seen starting to manifest inside this quarter. Before we get into that, please remember to download the full report at lumapartners.com. Let's get into it. Let's start with the public markets. Now, one of the trends we've noticed here is that the ad tech cohort is actually trading above the MarTech cohort. And this is not just a single quarter phenomenon, but actually something we've been noticing for the last few quarters, and the gap is continuing to widen. We've talked for a while about ad tech and MarTech starting to trade more similarly, so this shouldn't be a huge shock, but it is worth noting that this is the only time, other than 2021 in a brief period, that we have seen ad tech trade above MarTech in over a 10-year look back of these two cohorts. So it's pretty noteworthy. And in fact, 2021 was a very unique period where you had a bunch of companies coming public at astronomical valuations, so it's really not even a great benchmark. Meanwhile, today we're a number of years past that ZERP era valuations, and companies are really focused on their fundamentals. So it is very noteworthy that this is happening, and we'll be curious to see if it continues to expand over time. What we chalk a lot of this up to is the different dynamics around growth. Now, in early 2023, almost 2 years ago, we talked about this notion that ad tech was dropping growth rates really quickly. They went from high 20% to about 10% as a cohort in just about 2 quarters, and yet they were able to maintain margins. Now, as you look forward to 24 and 25, that growth is starting to re-accelerate, getting into the mid-teens by 2025. Meanwhile, MarTech, because of long Sass contracts, and slower manifestation of that slowdown, has seen their growth drop moderately over time, but now they're actually below the ad tech cohort at around 10% growth. And it's much harder for those businesses to re-accelerate because they are still trying to lock in long annual plus contracts, which is big commitment, while dealing with slower sales cycles and tougher retention dynamics. And so what used to be a challenge for ad tech, that their growth could go up and down, is now actually benefiting the cohort. Another key item we're noticing in the ad tech cohort is the importance of scale for this sector. Now, we always are looking at different metrics across these cohorts to see what has high correlation between metric performance and revenue multiple. The challenge is that there's so much nuance in ad tech and MarTech that often there's not a lot of correlation. But one that has really started to come to the forefront is this notion of scale. The R squared, which is the correlation between that metric and the multiple, has continued to bump upwards every quarter in ad tech, which is now about an R squared, about 55. Starting to have pretty high correlation and confidence there. And so this is a big dynamic that's happening in the ad tech ecosystem as more and more spend continues to go to these larger platforms. And we're seeing this manifest not just in the public markets, but in the private markets too. And that is via M&A. One of the things Terry and I have been talking about all year is this notion of survive, revive, thrive, which is 23 was all about survival, focusing on companies' own bottom line, managing their growth, managing their employees. 24 has been more of a revival period. As I said, we've seen some return and reacceleration of growth. We've also seen a revival of M&A, though most of that M&A has been focused on consolidation M&A. Businesses needing to garner more scale in order to consolidate costs, consolidate markets, et cetera. And we're seeing that continue throughout Q2, Q3, and even more into Q4. And we're setting up for a period in 25 where we could see a revival of both growth, as we said, the ad market's only getting stronger, and M&A, as green shoot areas like commerce media, CTV, and dropping Fed's funds rate all set up for a perfect storm of more and more M&A that's not just consolidation, but even those more strategic deals. There's one more thing we want to talk about, and this is less about the markets and more about an ecosystem shift we're noticing, particularly around pricing and structure in the SaaS ecosystem. Now, the SaaS ecosystem has long been built on recurring annual contracts often tied to seats, whereas ad tech, to its detriment for valuation and perceptions, has been a usage and outcome-based model that was dinged for this fact that they didn't have the predictability of SaaS. And while there were years where ad tech tried to push itself to becoming SaaS, it really just never worked for media-type budgets. But now we're in a very different era, an AI era where there's more efficiency coming to the SaaS ecosystem, and in a change of the ZERP era where it's much harder to push through large enterprise-level contracts and major commitments, we are seeing SaaS start to shift back towards where ad tech is, and that is usage and outcome-based models. Even Salesforce, one of the early stalwarts of SaaS, is talking about that for their AI agents, they're likely going to price them on a usage-based model. Now, while we're in very early innings of this could be a fundamental shift in how people think about the SaaS ecosystem. And it's going to push away from steady growth, both up and down, and more volatility into those markets. But what we've always seen in ad tech is that when it works well, especially around outcomes, it can create massive network effects and scale incredibly quickly. So it's a very exciting development in the MarTech and SaaS landscape, but it's also exciting in how that translates into the relative comparison to ad tech and how those models are going to be viewed in the future. That's it for me. As a reminder, please go to our website, LUMAPartners.com, to download the full report. It has all of the data on public markets, M&A, and private financing across ad tech, MarTech, and digital content. I'm Connor McKenna, signing off.